enormous potential for resource growth in the middle of probably the most prolific gold district in Canada, where we now hold one of the very few large projects not owned by Agnico.
Today, we are fortunate to be joined by Mr. Dan Wilton. He is the CEO of First Mining Gold, a Canadian gold development company. They have two of the largest development projects in Canada, Du Parquet in Quebec and Spring Pole in Ontario. And today, Dan has agreed to join us. We're going to talk about what the company has right now in terms of gold in the ground and what it took to get to that point, and what we can look forward to in the future in terms of potential additional gold discoveries. Dan, welcome to Ron's Basement. Welcome back to Ron's Basement.
Ron, always a pleasure. Always a pleasure.
So you are running a company with these two huge development projects in Canada. I think in total, your company has kind of defined gold resources of about 12.5 million ounces. Is that correct?
Yeah, that's it's in that ballpark for sure, and growing all the time. You know, we had a little increase in that amount with the new resource that came out on Hope Brook that our partner Big Ridge Gold had put out recently. So yeah, lots of room for that to continue to grow.
And I want to mention this before we dive a little deeper into this. Yes, you have the large Du Parquet project in Quebec. You have this large Spring Pole project, but you also have an interest, with Cameron, you own 100%. And then there's three other projects that you've partnered out. You have the Hope Brook project, you have the Pickle Crow project, and then you have is it a 15%?
Yeah, but a 15% ownership in Treasury Metals.
All of which are in Canada. I want to emphasize that.
Correct. Yeah, yeah, absolutely. In great jurisdictions in Canada.
So when we talk about this rough, not necessarily rough, but this 12.5 million ounce number that is the lion's share is taken up by the Spring Pole project and the Du Parquet project, but there is some additional ounces that are spread amongst those other four projects. My question for you is this: what went into this 12.5 million ounces? Obviously a lot of drilling, obviously a lot of work. Can you tell me just a rough idea of how much work went into defining those ounces?
Well, you know, we'll take a step back and look at Spring Pole first. So Spring Pole would have today, including development drilling, you know, I think our last calculation was around 200,000 meters of drilling.
Wow. Okay.
And we're very fortunate at Spring Pole because of the nature of the mineralization. Like it's a big, continuously mineralized sort of porphyry intrusive ore body. And what that means is it's very continuous. So it allows you to define the resource basically with fewer drill intersections, because defining resources is basically all a matter of geostatistics. So there, you know, it's how you imply or understand continuity between sample points. So for higher grade resources, for example, you typically would need, like underground resources, you typically would need far closer spaced drill holes to give you confidence in a resource. Spring Pole is a bit different because it has this this really strong continuity. So, you know, we've defined the resource at Spring Pole, which is, well, the resource I think is about 150 million tons. That was 120-ish million tons of reserves in our mine plan. And yeah, so that was, let's call it all told, in the neighborhood of 200,000 meters of drilling. Now at Spring Pole, it's expensive to drill because it's a remote camp. You know, a lot of that drilling was done either from the ice or from a barge because there's, you know, the deposit sits under the bay of a lake. So it's technically complicated to drill out. So that drilling is quite expensive. If you had to put, you know, what's the replacement cost on Spring Pole, it's easily in excess of $100 million.
Wow. Which is almost where the market cap of the company is today, correct?
Yeah, no, absolutely.
I don't want to bring up the elephant in the room, but that's
But to
one
put it in
project.
context,
Put it in context. No, I mean, and again, I say that to point out the value proposition, because that's just Springpool. Du
yeah,
Parquet also had what, 270?
200 between 2008 and 2016, 270,000 meters of drilling. Now, Du Parquet drilling is less expensive
Sure.
because the project is, right off a highway. In fact, the highway goes over part of the project, but we'll deal with that later. And in that area of Quebec, you have just basically every mining supplier within 100 kilometers of the project. Well, call it 120, because you could get from Timmins, Ontario to Val-d'Or, Quebec. In that area, I think is produced well in excess of 100 million ounces of gold. You've got all kinds of operating mines, and basically every mining services supplier in the world is there. So great place to be developing, and you don't need to fly people up to a remote camp. They can go home at night. So yeah, it is less expensive to drill there, which is something we're excited about with our exploration plans at Du Parquet moving forward. Because I think we get great bang for our buck in drilling there. But yeah, easily the replacement cost of the drilling at Du Parquet would be $50 million plus.
Wow.
And then there's environmental study, and the same thing at Springpool, right? There's all the other work that's gone into it, not just the drilling cost, but the environmental work that was done, the engineering work that was done, the geochemistry work that was done, all of that adds up to, I don't know exactly what that number would be. You've never tallied it, but at Du Parquet, it would have to be approaching 60 or $70 million anyway. And, you will recall that we consolidated our 90% of the ownership there, the 10% we didn't own last year, for about 25 million.
Right. So it's significant. I mean, to replace not just the drilling that was done, but also all, like you said, all the other environmental work and everything else. It's a significant cost.
A significant cost, and it's significant time too, Ron. That's the other thing, right? Like if you were starting today to say, okay, we're going to do all that work, you're talking about stretching out a development decision by 7 or 8 years, right?
Yeah.
From 2008 to 2014 was how long it took Clifton Star to get to a pre-feasibility study. So there's 6 years there, and a lot of work that had to go into understanding the ore body to get there. So that's why, listen, I understand. I've been an investor in some great exploration stories, and exploration's great because you get a big drill hole and you get momentum and stocks can rocket and people get excited. But an exploration story today carrying, $500 or $600 million market cap, I kind of look at that and, I scratch my head, because they still have 7 or 8 years and $100 million plus in front of them to get to where each of our projects are. Right.
That's what I was going to say. Like the exploration companies, and I want to highlight this, they're trying to get where you already are.
Yeah.
Right. Is that safe?
Yeah, absolutely. And there's a probability element attached to that, right? Exploration is risky. How many good drill holes discoveries actually become mines? The answer is, maybe it's 1 in 100. Even if you have great drill results, right? Is that hole going to bulk out to something that can be economic when it's mined? And that's something that just takes some time and capital and brain power and machine power to figure out. So no, Ron, you and I've talked about this before. I'm a deep value guy, right? I always have been. Every investment I've ever made in my life has been because I've thought I've seen some value. Yeah. And that's what attracted me to First Mining in the first place 4 and a bit years ago. And our share price when I joined was, higher than it is today, which is crazy. But it was because we have the value in these resources. We've done the time, we've spent the money, we've committed the resources to defining these things. And so now as a result, you get beyond the current generation of projects that are kind of ready to build in Canada. Like Springpole is, I think, the next big mining project to be permitted in Ontario. Like, I don't think there's anyone ahead of us in the queue. So, you get real focus from that on the environmental assessment side. And broadly in Canada, there's maybe 2 or 3 more that aren't in construction or financed for construction today that that might be ahead of us, but there's not many. And then behind us, there's quite a gap, right? If you weren't starting the environmental assessment in 2018, so we've been at it for 5 years, and if you haven't submitted that project description, maybe with COVID, it got delayed a little bit, maybe you can squeeze a year out of that. But I think we've kind of got the better part of a 4-year head start on a bunch of other projects that would be coming in behind us.
Well, and there just hasn't been a lot of money coming into the sector for the last, whether you look at the last year, 5 years, or 10 years.
Yeah.
I am a value investor. I once heard it said, I like to buy dimes for a nickel, so interesting prospects as we move forward for the company. So all that drilling was done, all that work was done. Now, over the last year and a half, you've consolidated, and I'm horrible, the Bertucci and the Abitibi regions around both Springpole. Highly prospective areas. There's work. I know it's, I'm going to say limited, but of course you wish you had unlimited funds to drill unlimited number of holes. But there is some work being done. I mean, I want to reiterate this to the viewers. An exploration company hopes to be where First Mining is in 5 or 10 years, right? Because it's like you said, there's some probability involved, and so you're there. You have the gold in the ground, but then there's this extra bonus. I'll say a bonus kicker potential in that you're doing some exploration work around those regions, and that you could find some more gold.
Yeah, upside optionality is how we talk about it, Ron.
Okay.
And I think it's important to know that when you're talking with larger cap gold producers, having a deposit that's sort of seemingly what you see is what you get is one thing, depending on how good that deposit is.
Yeah.
But everyone wants to see where the upside is, either around the existing deposits or in the district around it. And that's why a couple of years ago we embarked on this process of consolidating a bunch of exploration potential to the west of Springpole in the Bertucci Greenstone Belt, which has been largely unexplored. Certainly underexplored, but largely unexplored. Even relative to the Pickle Lake camp, relative to the Red Lake camp, it's seen just a small fraction of the exploration, but has every bit of the potential geology. And we know that because we know there's a 5 million ounce deposit sitting in the middle of this gold camp because we own it, right?
Right.
So that for us, sort of gave the real imperative for us to start looking at what's the real generational opportunity around this. And so critical for us tackling that was bringing James Maxwell onto our team. And so we're delighted to have had James join. He's a really, really talented explorationist. He's built a great team and, really taken our understanding of the geology of what we own to a different level. But B, he's a really passionate gold finder. And I think we'll definitely find a time that you can connect with James and have him virtually anyway in the basement just to kind of hear him tell the stories, because it can't help but get excited to talk about the potential that we see. We think we could have multiple deposits, potential for higher grade deposits, potential for these similar big bulk tonnage targets like Springpole that have just never been looked for in this environment. ever.
Mhm.
So we think there's huge opportunity there. And then at Duparquet, we earlier this year acquired some ground from IAMGOLD that kind of ties the rest of our package together quite nicely there in the Abitibi. But we've got, all kinds of exploration potential. All that work was done between, 2008 and 2014, 2015. But a lot of that drilling, Ron, was done in a hurry. And so when you do drilling in a hurry, like 100,000 meters in a year, when you're doing that, you generally don't have the time to understand everything that you are seeing. So to have the benefit of time and a bit of distance and our team's ability to go back from first principles, really reconstruct what we think the geology story is there. That led to a targeting exercise that James and the team have done. I think there's amazing potential, like a lot of things, and particularly the satellite deposits at Central Duparquet and Dumico, which are just off to the east. They were kind of discovered, drilled out, but there's a lot of very simple extensions of those deposits that have never been tested. Never really tested at depth. And then on the IAMGOLD ground, we had one of our deposits kind of going right up to the boundary, and they have some drill results on the other side of the boundary that never been looked at together, right? This is the benefit of James calls it the defragmentation of property holdings.
Right.
I'll call it consolidation of the property holdings, but there's enormous opportunity for us to see those things grow to the point where some of the targets that we're pointing out, we think there's real bona fide potential along strike and at depth in this type of deposit to potentially double it. And, we got to remind people that we're sitting at, sure, measured and indicated resources of 3.5 million ounces and another, 2.5 of inferred that's sitting at depth and along strike in some of these less drilled out areas. So enormous potential for resource growth in the middle of probably the most prolific gold district in Canada, where we now hold one of the very few large projects not owned by Agnico. So does that have strategic value? I mean, I think it does, we'll see.
Yeah, right off the highway too. I mean, isn't there a gas station right across the street from?
Literally. Yeah. No, and that's, it's if anything, it's the deposit is right beside the town, almost in town, but it's a very similar story to Canadian Malartic, which I think is the largest or second largest gold mine in Canada today.
Right.
And that was the Osisko story as well. But in this area, it's a mining town. This town was built around the original mine, and we've had great discussions with the local community. We were out in the community last week, meeting with the mayor and council, meeting with the Indigenous community around the area. And, these are, mining is not a surprise to anyone in the Abitibi. It's just the mining culture in the area is fantastic. So still lots to figure out and lots of work to do, but we've got a really exciting PEA underway at Duparquet that we'd like to have out kind of by the end of the summer, and just give people a sense for how we think this project might evolve. But that will be separate and distinct from the exploration opportunity that you talk about. And we're mobilizing drill rigs right now, aim to be drilling the beginning of May, and should have drill results coming out over the course of the summer where we can demonstrate some of this growth potential at Duparquet. So, and Ron, it's funny, I encourage people to go look on our website. We, on the corporate presentation, we do have a slide about the exploration upside at Duparquet. I don't have the numbers right to hand, but some of the numbers that they generated in drilling at Duparquet, if you saw that in virgin ground in the middle of the Abitibi,
Right.
we're talking like, 30 meters of 10 grams kind of stuff, like, lots of 30 to 50 meters at a gram, 2 grams, 20 meters of 4 grams in an open pit. If you just saw those drill holes on virgin ground, I would guarantee you you'd have a company with a market cap bigger than First Mining Gold.
I was going to say, all you have to do is re-release those numbers, Dan. I'm just joking. One thing very interesting that you said that I want to back up to just briefly is you'd mentioned how at Duparquet historically the some of the drilling by the previous owners had been done during a short period of time, so there wasn't maybe the opportunity for the data to be properly analyzed. Is that is that process over, or is that ongoing? Or I mean, I guess you're always analyzing and reanalyzing, but the meat of it, has that been accomplished?
Yeah, well, I think it gives us an opportunity to go back to look at the work that was done. And part of that is, what's the geologic model? How have they, what do we believe the controls of mineralization are? What's happening outside of those controls of mineralization? Because there is gold sitting outside of those, some of the hard boundaries that they've drawn in the resource estimate. So it's really, going back to first principles. What it gives us an opportunity to do, because we have all the core, we can go back and look at that now and understand how it was logged. Do they really understand what that was? And James and the team have been digging into it, and I think have some curiosity about maybe some of kind of what was done in a hurry, what was missed, what's the interpretation that they were looking at, because some of the things they've been looking at just in some of the sample holes just raises some questions about, did they catch everything that was there? Did they really understand it? Or did you have a junior core logger kind of calling it X because it sort of looked like X, but maybe it was Y? And if it's Y, it might lead you to a different understanding of the deposit. So all those are opportunities that having 270,000 meters of core, sitting in a core yard means that you can get people to go back and do that work. And you don't have to spend, $150 a meter, drilling and collecting samples and assaying.
There's a large database of core and data, I'd imagine, that can be kind of looked at in different ways and interpreted in different ways. Very exciting.
Yeah, no, it's a lot to do. It's going to be a very busy summer at Duparquet on the exploration side. And, we hope that this is really just the start. I think, when we started talking about Spring Pole 5 years ago, Ron, everyone used to ask, well, you got 5 million ounces there. What's the value of the 5 million in first ounce? Why do you need to find more? It's already big enough. Prove that it's economic with what you have. And I think what we've learned over the last few years is every incremental economic ounce that you can demonstrate puts this project further into a class of its own. These projects, I should say, puts them further into a class of their own where, ultimately, I think if we can demonstrate that there's a path to permitting and demonstrate the economics of these projects, I think it really does leave you in a very good position to show that strategic value going forward. And again, if the market won't recognize that for whatever reason, we're very, very confident at some point the strategic market will. Yeah. Get you a little bit nervous about at some point being maybe having to think about selling too early if that happens and you don't see the full and fair value. But I think we'll cross that bridge when we come to it. All we can do is keep going, keep raising the profile of the projects, and keep doing that fundamental work day to day that's taking risk out of them and adding value.
Yeah. And when I look back over the last year, the last 2 years, the market has not recognized it, in my opinion, but the company has made smart, strategic, long-term oriented moves that eventually, I mean, let's just accept the reality that we've been in a very poor sentiment environment for precious metal mining stocks, in particular for development stocks. It can't, in terms of sentiment, can't get much worse. I guess it can, but it's going to be.
It'd be hard. It'd be hard. I mean, honestly, at $6 an ounce or whatever we're valued at today, like. pretty tough for that to go to 3. You
Yeah.
know, that's starting to get to silly season. Well, we're already at silly season.
Yeah, I mean, with this, with the moves that you've made, how you've positioned the company, with this, potential growth opportunity at both Springpole and Du Parquet, I think we have a lot to look forward to in the coming months, year, 2-3 years down the road. And if the gold price continues to cooperate like it has been, which I think we both foresee that it will, it could be some real interesting times for mining.
You just start thinking about what the leverage to this portfolio to the gold price is.
Right.
That's defined at Springpole in our pre-feasibility study. Like we're talking $250 million pre-tax NPV. So 2 times our market cap plus for every $100 in the gold price above $1,600, Ron.
Yeah, right.
So we're sitting today at $1 billion more pre-tax value than we were when we put out the report. Well, at a $1,600 gold price, just the fundamental value inherent in these assets and the leverage that big assets have to rises in the gold price, just in terms of absolute value in those ounces, is phenomenal. So I think, not to mention you're buying them at a fraction of their fair value already. It's for the deep value guys like you and me, it's a dream come true. We just gotta then surface the value.
It's like buying dollar bills for a dime, right? I mean,
or 6 cents.
Yeah, 6 cents. Yeah, right. But even a better deal, a dime with the tax taken out already. We are not, but we are not. I'm not offering financial advice.
Nope,
just
nor
my strict. Yeah, nor is Dan. Just my strict opinion. Dan, thank you. We, on behalf of my viewers, appreciate your insights, your time that you shared with us this morning. If people want to check out the company, firstmininggold.com. Or they can reach out to Paul Morris. I'll have his contact information in the description to this video. Did I miss anything, Dan, or is anything more you want to say?
No, I think that's great, Ron. As always, we really appreciate your support. And if anyone wants any more information, there's lots on the website, but feel free to reach out as well.